Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities. We'll take a look at the dollar, yields, precious metals, and then into the commodities that I follow. I'll give you my financial opinion. We'll work through it together. And if you guys need any help commodity related, go to finding-value.com. Join our platinum membership, and we have a question and answer session, 7 a.m. Mountain Standard Time on Saturday, which is tomorrow. We'll see you there if you're a platinum member. So let's dive in here. Let's take a look and see what's going on. This is the dollar. I drew this in yesterday. I took the lows through here and took the highs through here. Are we scribing out a pattern where we could potentially move higher in the dollar? I think it's a possibility. It looks like it's trying to turn here. One of the things that I see is the size of this pullback is greater than the size of this pullback, and we are contracting in these pullbacks. You can see the size of them come down shorter and shorter and shorter. A lot of the times when I see that, it's putting in, basically the buyers are equaling the sellers. We're seeing a low here. If this kind of holds there, we could see a pop higher in the DXY. Stronger dollar could potentially come breaking out of this pattern for a little bit. It's not a huge pattern. You'd probably only see it come up somewhere. I'm not claiming, certain size there, but I don't think it's going to go up as high as maybe what some people think, but it'll pop up. Looking at the 10-year yield, the 10-year yield is also going higher. These coincide with each other. Stronger dollar, stronger yields. They're all kind of interconnected. Now, if I were to take just a simple trend line down, you can see that it looks like we're trying to break to the upside for the 10-year yield. And I know the producer price index, I think it comes out next week. People are speculating on a 7.4% read, which is pretty high. And then people are thinking, well, maybe they're not going to lower rates, lower the increase of the rates, I should say, as much as they might. So here comes the 10-year yield creeping up higher today. We could be breaking this downtrend line, and we could go higher in the 10-year yield. Bond prices go inversely to yield prices, so we're seeing a large sell-off here. That also has a steep trend line heading higher here, potentially, and there's another trend line through here as well, but we'll see what happens here with bond prices and yields. To me, it looks like yields are trying to go higher, bond prices lower. People are selling off bonds, and yields are going higher. The 30-year yields also heading higher today, up 2.66%. So again, momentum's downward, but we're getting some buying pressure in here in yields. It's been a pretty strong sell-off from top to where we are today. TYX to TNX ratio sideways, 0.53%, not huge movements there. Still very low in relationship to history, the yields here. Usually when this is low and it goes higher, precious metals do very well. If it goes downward, usually oil does very well. We are very low in this ratio compared to historical standards. And it doesn't mean that this can't go lower, guys. Keep that in mind. It doesn't have to, just because something's cheap means it can't get cheaper, or something that is low can't get lower. The CRB index today is holding up quite well, just sideways today. We've had a massive sell-off in the CRB index over the past, 1, 2, 3, 4 trading days. Just got ripped to the downside, but it looks like we're consolidating or trying to the past couple of trading days. We're still above the breakout, and we'll see if this thing holds. The CRB to S&P 500 breaking to the upside. What? Who would have thought that? I thought we were just going to go falling into space over here. But that's breaking to the upside here. We'll see if that momentum can continue. We have kind of a nice little pattern here that we have a 3-leg down, and then we'll probably come back up somehow. And commodities could outperform the S&P 500. We're seeing that contraction in commodities in the previous chart here. We're contracting here, and we're above the trend line. That's usually ripe for a reversal. And the CRB to S&P 500 looks like the commodities could outperform. So at least we've got a little bit of alignment there. Gold heading a little bit higher. We get a little wick at the top here. I don't like wicks. They usually say that you want to go down a little bit. And if you notice this, we have the stronger selling pressure day, and we had 1, 2, 3, 4 up days in it. And we've got a little wick at the top. Makes me think that we want to go back down a little bit. Maybe we form a pattern that looks something like that. To some degree, that's kind of what I'm guessing it's going to do, but that's what we've got right there. So I think it's going to go slightly lower in the short term based off the candlestick patterns. Silver performing quite well. We do have a little wick at the top. I don't like those wicks at the top. I like finishing strong. Usually when you get these wicks at the top, you usually get a little pullback out of these things, but strong performance in silver. Platinum also putting the pedal to the metal a little bit, up 1.94%, finishing quite strong. Doesn't look too bad. We are getting a lot of, we'll call it intraday volatility with all these little wicks at the top. I don't know what's going on there. I'm not used to seeing all these wicks. Usually you get days that trade sideways. You get days that end real strong, but these all have a lot of wicks. Like someone's trying to push this thing back down. You see it all over the place on platinum for some reason. XEU to gold ratio, the gold and silver mining companies do not like what they're seeing, whatever the heck they're seeing, traders at least, but it looks like there's some liquidation there. Could go lower in the short term, back down maybe to the trend line or something like that. We have not broken this gigantic, big long-term trend line yet. But we're putting a bearish piercing on the monthly if we close the month there, which means we could head a little bit lower. GDX, slightly lower today, minus 1.16. We're up against resistance here. We got to break through that. And again, guys, it could break through it at any time. The short term's the least reliable in terms of trying to figure out what the heck it's going to do. I mean, you could have some news come out and just blow this to the downside. And the structural underpinnings of the market, the fundamentals, will be the thing that pushes it up or down over long periods of time. Short term, anything can move it. SILJ also heading a little bit lower today. Again, we're right up against this resistance line going across. And what I mean by resistance, you got buyers and sellers all in these little areas here where you got shares being traded, where it basically has to break through all of that selling pressure to get through it. So you usually get these areas where you kind of get stuck. And that's what I'm trying to signify, is that you could get stuck here in SILJ for a little bit. Crude oil, is that an up day? 0.1%? Did that actually end up today? This thing, it's been getting a lot of selling pressure here. It does look like we're slowing down. And the reason I say it looks like that, and it looks like we've got one wave, third wave, fifth wave, and hopefully this thing's getting close to being done. We do have a contraction in the candlesticks here, the opening and closing prices. So you can see if I circle them like this, they're getting smaller and smaller as you go down. So it's contracting, like the buyers are equaling the sellers. We got to see some buying pressure come in here and show us a big fat candlestick like a bullish engulfing, or put a little hammer candlestick or something to say that this thing is for surely turning. Right now it's premature, but it does look like it's trying to turn. Natural gas is ripping it. We had that nice big buying pressure day, and it's starting to rip higher. That's looking a lot better than what it used to. So that's natural gas up 6%. Big picture view, though, we are pretty cheap on the downside. Well, I thought we were cheaper. It's come up quite a bit, but we were cheap on the downside down there. But we're coming on up. You can see the big wick at the bottom of the candlestick this week. So it looks pretty good compared to what it was before. Now, XOP, yeah, you know me. People are selling it, guys. They are selling it. They are liquidating their oil shares. Big sell-off here. It started with this bearish engulfing, and then the momentum continues lower. I do not see any relief in the short term of this turning around yet. We do have the 3 humps, 1, 2, and then 3, and we could go all the way back down here. That is a possibility. High possibility, in fact, looking at the momentum behind this move there. So lots of selling pressure. Someone, something is dumping, and we could get back down to the support level of $117, and we're at 130. We could see further downside. OIH also getting some dumping here. Big selling pressure there. I think that this is a return move after the breakout of this long-term breakout. And we still have further to fall if the sellers want to push it down further. The trend line's at $240. We're at $270. There is some further downside that could potentially happen. It's about 238, 240, somewhere in that range. And we've got some pretty good selling momentum behind this. Looking at the Sprott Physical Uranium Trust, still selling pressure. This looks like we could still further go down even further. We are in a heavy support area down here, and we'll see if that support holds and if buyers show up to buy. But right now, lots of selling pressure on that side over there. Uranium, I'm going to go off logarithmic here. Sideways day to day. Again, larger selling pressure here. The bounce isn't that dramatic yet. The buyers aren't showing me that they're stepping in yet. This is fair game to go lower if the sellers want to push it here. It's fair game. Am I going to sell? No, I'm not going to sell. I'm just holding on. But that is what I see in that chart. TAN moving sideways. Looks like that could even sell off a little bit in the short term, but looks better long term. The symmetry here, this side is this side. Cut it in half. Comes up, hits the selling pressure, goes sideways, and then potentially heading higher. COPX down 0.44%. There we are, down a little bit. We do have this bearish engulfing here. I don't see too many buyers stepping in yet. We got to see some buyers there, but kind of neutral at this time on it. Lithium selling off a little bit. It's just grinding sideways at this time. We've got REMX slightly lower, down 1.5%. Still looks all right. We're above the long-term support level right across. The S&P 500 selling off 0.75%. And again, this is a rising wedge, and that usually projects downward when it breaks to the downside. So I do think that this could break to the downside in the short term. I also think the NASDAQ, man, this thing, it doesn't look horrible. We've got lots of big buying pressure days. We got some big selling pressure too. It's a battle. It's a battle here. Could you put kind of a flag pattern that looks like that? Yeah, you very well could. And if we don't break this downtrend line, we could be heading lower with the S&P 500, which I think is a high likelihood. So that's what I see there in the U.S. Composite Index. I think it could go lower, especially with yields going up and the dollar strengthening. So tying that together, yeah, it doesn't. I wouldn't be going long in it right now. Emerging markets, again, I think it's pricing in a stronger dollar. I think we could go back maybe somewhere down here for emerging markets. Overall, though, I think it looks real strong. We've got a big break or a big support level underneath us. We've got the trend line break going down, and I do think that we might go sideways for a little bit before heading on up. XHB, which is our home builders index, or ETF, I should say, ETF. Just sideways. Doesn't look too bad still. We'll see what yields do. This seems to do whatever, inverse of what yields do. Yields lower, home builders higher. Moo, just moving sideways. Not much to say there. We've got copper also moving sideways. We are at, let me back out here. We're at a strong resistance level. The price of copper is, let's see if we can get this thing to load. There we go. So this strong resistance line going across, if it can actually load, we're right at that strong resistance level. We're trying to break out from it, and hopefully we can break and get a move here at some point. I accidentally hit it twice, guys. My bad. We're right there at that support resistance level. It's resistance right now. It's a strong resistance line. We've tried breaking it multiple times in the past. Was not successful. Now this could, I mean, it could fall back if we have a weaker overall market. We've broken out. We've had the biggest sell-off, and we could come back. We could come back, do kind of like an ABC correction, maybe even back here is a possibility. Now, I'm not going to worry about the short-term movements. A lot of people mess up the bull market trying to time the short-term movements. Peter Lynch, all the all-time greatest investors, they say that the short-term, very short-term, yeah, you're not going to be able to time it. Who am I to argue with the most successful investors in the world? So what I'm going to do is nothing. Enter the stocks, add some along the way, and just hold on and enjoy the ride is what I'm going to do. Here is lumber. Lumber also heading a slightly lower, 0.4%, but it doesn't look too bad. We're just going sideways. Iron ore heading higher. I heard that China might reopen at some point here. And I don't know if they've got like 8 billion false starts on China reopening. So if they reopen, I think it's going to be positive for copper, iron ore, aluminum, all those types of metals. I also think that it'll be positive for oil and energy, just in general. And there might be some sort of political thing, like they're going to lock down, drain our strategic petroleum reserves, wait for the reserves to end, and then open up and try to do something that way. I know they could use it as a tool to export inflation to us. That is a possibility. Aluminum, it's heading on higher off this support level, and it still looks good. I think this support level's strong. I think it still looks pretty good. Looking at Baltic Dry Index, looking like that's trying to break out to the upside. The Baltic is getting stronger. One hump, two hump, and then the third hump. Will it go all the way back down? It may not. It might. That's the hardest one to really get right. But it looks good. Eventually it'll work its way higher, I think. And then this is the coal futures. You can see that we have like some sort of pattern there. We broke it to the upside and then came back. We'll probably do a retest, and I think eventually this will roll over. Potentially. But maybe not yet. We're in the winter, and we'll have to see. We'll have to see. It might. Because usually you get back to that resistance level. It's not as strong, like this resistance level here. It's not as strong. It hits it and then comes back down. But we'll see what happens when it gets there. I know that there's an energy crisis. I know people are burning coal like mad. But we'll see when we get there. And then Ethereum, slightly lower today, 1.6%. We are just chopping sideways here. Which way will this thing break? We did enter this pattern from the top side down. Sometimes they like to blow to the downside. So this is one that we're watching. And then BTC, Bitcoin also down a little bit, 0.74%. The bloody nose, usually that's a continuation pattern higher. Getting some mixed signals between Ethereum and Bitcoin. But that's what I've got for today, guys. Oil's been pretty brutal. It's a pretty strong sell-off in a pretty short period of time. Obviously, I don't like seeing that in the portfolio. I've shed quite a bit this past week. I'm getting used to it, though. The volatility moving all around. My portfolio's been, it was close to highs like a couple weeks ago, and now it's pulled dramatically back. It's been going all over the place. Volatile is all heck. Obviously, I hedge myself with time. I think that with a longer term outlook, that the commodity bull market will play itself out. That's kind of what I'm thinking. The reason I think that is it's all rooted in the fundamentals of supply-demand characteristics and the deficits out in the future. The world that everybody is envisioning with electric vehicles, renewables, and all these other things, I don't know if it's possible to happen, period, because of the mineral intensity of it. And with the mineral intensity and the deficits out in the future, like the near future here, guys, we're talking a few years out. I think the pricing has to be higher for mines to come on. And if you have an inflationary environment, the cost curves are moving higher on you. So the prices eventually will go higher, period. If your cost curves are going up, if energy, I think energy is going to go up quite dramatically at some point. Right now, why is it going down? It's a good question. Good question. I know everybody's got all these answers. It's not fundamental physical driven. It's probably paper driven and fears of potential demand destruction. Problem is we're not seeing any demand destruction in the inventory level numbers. We've decimated the SPR to keep this thing, the prices in check. There was some data I looked at and talked about the SPR, and if we didn't release the SPR and you were to take those barrels out of the commercial inventory, the projected price given where that inventory level is would have been about $150. That's roughly where it would have been. 150, 160. Now we've just dumped all that SPR. The market has seen that as supply, and we are supposed to be around 70 something dollars, $80. That's kind of what the fair value would be as the base case given where inventory levels are at. But let's continue to watch the inventory levels. If we just dive bomb the inventory levels towards zero, it'll take time. The inventory levels obviously have some hundreds of millions of barrels in it. But if we continue to dive bomb that, prices, I think, will respond. But right now, everyone's afraid. The large negative market sentiment in oil, uranium, and a lot of these commodities. And I would say overall in the general market as well. And, maybe I'll do another clip. I'll do another clip on that. I won't even bring it up. But that's what I've got for today. If you guys like the content, give me a thumbs up. Subscribe to the channel. Subscribe to the website if you guys like. And don't forget, we've got the Platinum membership question and answer session, 7 a.m. Mountain Standard Time tomorrow, which is Saturday, 12:10. We'll catch you guys later. This is Finding Value.